One of my favorite dividend growth companies, Costco, just released earnings and they were great in my opinion. So what we're going to do in this video today is have a look at their most recent quarterly results. We'll have a look at their income statement, cash flow, and balance sheet. Then we'll go and look at their financial metrics on Stock Unlock. So if that's some content you'd be interested in watching, I encourage you to watch the video. And if you like it, give me a thumbs up and subscribe to the channel. So without further ado, let's go and dive right into the video. So Costco Wholesale, or Costco, just reported their first quarter fiscal 2024 earnings and also announced a special cash dividend of $15 per share. That's right, $15 per share. So we're going to look at their quarterly earnings and then we'll look at that dividend as well. So they announced their most recent first quarter of 2024 earnings, which ended on November 26th, 2023. So the company reported net sales of $56.72 billion, an increase of roughly 6.1% from that same quarter from the prior year in 2022. So they summarize it here in this table. So as you can see, they have the 12 weeks and then they also have it adjusted for any impacts of changes in gasoline prices or foreign exchange, as these have both been volatile over the past couple of years. So let's go and look at this column. So in the US, they had about 2.6% growth year over year. Canada, nice 8.2% growth year over year. Other international, 7.1%. Total company, 3.9%. And e-commerce here as well at 6.1%. So the total company here coming in at 6.1%. So great growth here year over year, in my opinion, for Costco. Now, what we can look at again is their net income. So it's roughly 1.589 million. So it'd be meaning 1.5 billion here, or $3.58 per diluted share, compared to the 1.3 billion or the $3.07 per diluted share in the previous year. So great growth. And if we scroll down, we can then have a look at that dividend. So they announced a special cash dividend on the Costco common stock of $15 per share. And that's going to be payable on January 12th to those shareholders who own shares as of the end of business day on December 28th, 2023. So the aggregate amount of the payment will be roughly 6.7 billion. So we're gonna have a look at the dividend later and see if they can afford this when we look at the balance sheet analysis and their financial metrics, as well as the net income when we look at the income statement momentarily. All right, so that income statement, let's have a look. So this is for the 12 weeks ended, or the most recent quarter ended in November 2023 compared to November 2022. So as we can see, net sales of 56 billion, almost 57 billion compared to 53 billion in the prior year. So great growth of net sales, and their membership fees stayed relatively the same. Again, they haven't changed the dollar amount that they charge for these membership fees. So I expected it to be relatively the same or a little bit higher than the previous year. And when you add all of that up, their total revenue is roughly 57 or 58 billion dollars compared to $54 billion in the previous year. So great growth there. Now, revenue is great, but we need to look at revenue once you deduct the relevant expenses. So merchandise costs of $50 billion and SG&A, or selling general and administrative, of another $5 billion, leaves them with operating income of roughly 1.9 or $2 billion for this quarter. Now that's great growth over the previous year of $1.7 billion. So again, they're still growing this operating income year over year. Very consistent growth for such a mature and large company. Now, when we bring that all down and account for any interest expense, any interest income, and any taxes or income taxes, your net income is roughly $1.6 billion compared to 1.3, almost 1.4 in the previous year. So again, nice steady growth here for Costco in terms of net income. And then when you look at that net income per common share, $3.58 on a diluted basis compared to the $3.07 in the previous year. So great net income per common share growth as well. So this was a great quarter in my opinion, a very stellar quarter. I've come to this conclusion that I always think there's going to be a major slowdown. Again, it's just like a bias I have in Costco's business. They're going to have, one of these days, they're going to have a bad quarter. It still hasn't happened yet. So they are continually producing strong results through their business model and their membership fee model and generating positive growing net income over time for us as shareholders. So let's go and look at how that translates into actual cash flow. As investors, we want to get paid for our investment, and we like to look at that in terms of cash flow. So when you look at the cash flow statement, again comparing November 2023 to November 2022, you bring down your net income of 1.5 billion, adjust for any non-cash items. So again, that's like depreciation, stock-based compensation, any changes in your working capital, AP, AR. So again, it's accounts payable, accounts receivable, etc. You get roughly $4.6 billion of net cash from operations compared to that $2.6 billion from the previous year. So a huge jump here. Now, when we look at their investing activity, so again, this is the money that they need to spend or invest in their business to continue to keep operating and growing. So they had some short-term investments mature and some purchases of other short-term investments, and they spent about $1 billion in what you call capital expenditures or CapEx. So reinvesting back into their business or their warehouses and their other items that they need to purchase in order to conduct and grow business. So it came out to roughly $366 million that they had to spend here in terms of CapEx or total investing activity. Sorry, the CapEx was actually 1 billion. It's because of this maturities of short investments that they had some nice cash flow come in. But again, nothing huge here as well. Now, when we look at the financing, so the financing, this again is any repayments of their short-term borrowings or debt, any new debt that they take out. So they took out roughly $500 million of debt, and then they paid out $900 million in cash dividend payments. So a lot of dividends here being taken out and paid back to shareholders, which we like to see. That cash flow is being returned to us in the form of a dividend. So great to see here, in my opinion. Now, if we scroll down, the whole quarter, they generated roughly $3.3 billion of cash flow. And again, with the balance of their cash previously being at $13.7 billion, leaves them with $17 billion of cash on the balance sheet. So great increase year over year in terms of a cash balance. So a great cash flow statement here, in my opinion. All right, now we're going to be looking at the balance sheet. So the balance sheet, remember, is just at a snippet or a point in time, and it shows the statement of the company's financial position at that point in time. So here we're looking at November 2023 compared to September 2023 over here as well. So as we can see, cash and cash equivalents, like we saw, was 17 billion. They have some short-term investments of roughly another billion. So again, probably about 18 billion in cash you could round up here. They have some merchandise inventories and some receivables as well. So roughly $40 billion in total current assets compared to the 35 billion in September 2023. So their cash balance has grown substantially over these past couple of months. Now we have some other property, plant, and equipment, and then these operating leases, which I don't really take into account. It's just accounting classification that you have to account for. Essentially, you have to record an asset and a liability for their right of use lease assets. Now, when you look at their actual liabilities, there's not really a lot, which I like to see. They have strong cash balance, like I said, of 18 billion. They have some accounts payable, but then their long-term debt, they have $1 billion that's due within a year, or what's called the current portion. And then their other long-term debt is another 6 billion, so roughly $7 billion here of long-term debt. So they could take all this cash and wipe out this long-term debt if they wanted. They could pay it off. They're in a net cash position. So again, like I said, roughly $7 billion of debt here and $18 billion of cash. They could pay it all off and still have $11 billion of cash left. So super strong balance sheet here, in my opinion. So again, I like to see this in the company that I invest into. Great financial strength here from Costco in terms of their balance sheet. So that was a look at their most recent quarterly results and those financial statements. Now what we're going to do is go and look at Stock Unlock. All right, so this is my YouTube dividend growth portfolio, so you should be familiar with this if you watch my channel. As you can see, it's been performing very well lately, but we're going to be looking at Costco specifically in this video. So Costco represents about 4.3% of my total YouTube dividend growth portfolio. So let's go and scroll down and look at Costco. So as you can see here, Costco is a pretty decent position in my YouTube dividend growth portfolio. Like I said, it's about 4.5%. As you can see, I am up about 54% on this position. So in terms of a percentage gain, it's been a great holding for me. I've held Costco for a while. I think it's going to continue to do great. But what we want to do is go and look at some of these financial metrics for Costco and why it has performed so well over the past couple of years, or technically decades if you wanted to look at a longer time frame. So let's go and look at Costco. All right, so we have Costco here. We have some information. I'll go through a couple of these and then we'll look at some other different metrics. Costco is a pretty large market cap company, $292 billion, operates in the retail industry. It has earnings per share of roughly $14.16. Valuation wise, it trades always at a high valuation, even right now as it's hitting all-time highs. The price to earnings on this company is 46.47, so super high valuation. Again, Costco is a great company. It usually trades in a high valuation, anywhere from 30 to 50. It's a very wide range. So again, it is a super expensive company, but it's a great company. So sometimes you have to pay up for quality. Again, I still think it's on the very high end of this range. So I haven't been buying any shares currently, but again, it is one of those companies that always does trade at a premium. So the dividend and dividend yield, so this is kind of skewed. It's thrown off a bit, as you can see by that special dividend that they announced, that $15 dividend. The same with the free cash flow payout ratio. Again, it's super high here because of that announcement of that special dividend they're going to be paying. So the dividend metrics here in terms of the payout ratios, etc., and the yield will be a little off here because of that special dividend that they are paying. When you look at the shares outstanding, that $442.74 million shares outstanding. So again, this is a great company. In terms of valuation, it is expensive like we just saw, but it is a great company. Sometimes you have to pay up for quality. So let's go and look at their financials. All right, so let's extend this out. So this is their overall revenue. I'm extending it out basically over the past 20 years. The revenue here is represented in the green line. So that's this green line here. And then we have the red being that cost of revenue, and the orange being the income tax expense, and any operating expenses here in that light yellow as well. So as you can see, the revenue, cost of revenue, etc., they've all been increasing steadily over time. So as revenue grows, so do those costs. But then again, so does net income. So this revenue trajectory is huge. It has been growing exponentially, very steady growth over the past 20 years. Now, if we scroll down, we can look at these in terms of each of these segments. This is great. Stock Unlock lets you do this. So the total revenue here, again, as you can see, I'll extend it out, just straight line up and to the right. So great revenue growth here. Again, revenue is not the end all and be all. We want to see that revenue actually translate into net income or earnings. So again, when we extend that, we can see that net income, again, growing exponentially over these past 20 years. What great results here, in my opinion. And our earnings per share, so our diluted earnings per share, again, the earnings per share of the company, again, growing up very nicely here over the past 20 years. Costco is just a beast, a mammoth in terms of financial performance. Now, let's go, again, we did look at the balance sheet and the cash flows. Let's go look at the dividends. So again, like I said, some of these dividend metrics will be thrown off, but again, not looking at the yield or the dividend per share, looking at the dividend growth rate. So they've been growing dividends at a nice 12.34% per year over the past 5 years, or a 5-year compound annual growth rate. So great dividend growth here, in my opinion. If we scroll down, we can have a look at those dividends again. Looking at it, it's kind of like a step ladder. You know, again, the dividends just continue to grow and grow. And like we saw, they pay out these huge special dividends like they just said they're going to do, $15 per share. They do that roughly every 3 to 5 years where they pay out a special dividend. They just have a bunch of excess cash, and instead of keeping it on their balance sheet or paying down the debt, they distribute it to shareholders. So again, I'm not opposed to that. I love getting high dividends. So that is a great strategy in my opinion. Now, if we look at their overall returns, we can see Costco here in this light blue line compared to the S&P 500. In this dark gray line, this is the total return. And if we extend that out over a longer period of time, you can just see the outperformance of Costco compared to the S&P 500. It's insane. Costco, returning 2,276% over this time period compared to the S&P 500 of 431% over the past 20 years. So this is a great outperformance of Costco over the benchmark or the S&P 500. So like we saw, they're going to be paying out that dividend. It's going to be $15 per share. So what we want to do is see how that's going to affect their balance sheet. So if we go to their balance sheet, we can see they have roughly 442 million shares outstanding, or 442,793,000 shares outstanding. So let's go and calculate this. So we're going to have 442,793,000 shares outstanding times that $15 per share dividend. So it's going to be roughly $6.6 billion of dividends they're going to be paying out as cash dividends. So that's a huge amount. If we go and look back in their balance sheet, like we saw, they have $18 billion of cash. So they can easily cover this dividend. After they pay out this dividend, they're still going to have about $12 billion of cash. And even then, looking at that debt like we previously saw, they have about $8 billion of cash. They could pay out the dividend, pay off the debt, and still have $4 billion of cash. Now, again, they're not going to pay off the debt. They're still going to keep that cash position strong. They're going to leave the debt as is, but they are going to pay out $6.6 billion of this cash here as a dividend, and they will still be in great financial health, in my opinion. So what am I doing with my Costco position? That is a good question. So I currently have, like I said, I have Costco here in my YouTube dividend growth portfolio. I've had it for a while. I actually bought a couple shares, not as many as I would have liked because I didn't have the funds available to me at that time, but I do have 2.712 shares of Costco, and it's about 4.32% of my total YouTube dividend growth portfolio. I would actually like to get that up to like a 6 or 7% position over time if I could, but currently I am not buying any shares. I'm just watching it. Again, it's hitting all-time highs. I do think it's a great company. It's very richly valued. It has always been richly valued, but even right now, trading at that 46 price to earnings ratio, that's very much on the high end in my opinion. If I get any dips, so if I see any opportunities where the price drops in terms of their actual stock price, then I will add. But right now, for me, it's too expensive. It's kind of in that $660 share price range. If I see it drop to kind of close, maybe the mid 500s or 500, again, maybe I'll start buying up some more shares. But right now, it's too richly valued for me to add to my position. So I'll just keep holding. I'm happy to keep holding. It's continuing to provide me great shareholder return. I do hope that it drops in the near future so I can add some more. But hey, you know what? It's a good problem to have. I have some shares and they continue to appreciate over time. So that's what I'm doing with my Costco position. I am just holding and currently patiently waiting for any significant drops, and then I will add to my position in the future. So that was my video on Costco. I hope you enjoyed it. If you had any comments or questions on this video, please leave them in the comments section below. And with that, I will see you in the next video. Thank you for listening and have a great day. Bye. Please note, I am not a financial advisor by any means. All of this content is made purely for your entertainment purposes only. Please do not take this as financial advice. Always do your own due diligence when investing, as investing is inherently risky, and I am not responsible for any investing decisions or losses you incur. Thank you and have a great day. Bye.